So you have a little bit of cash saved up and you say to yourself, what should I do with it? It's not enough for you to buy a house, but just enough for you to get started with this whole investment thing. But with all the options out there going from stocks, bonds, real estate, and not even crypto, it can feel a little bit overwhelming. And let's be realistic, right? There's always the fear of losing all your money, especially if you work really hard for it. But don't worry though guys, I got you covered. In this video, we'll break down everything you need to know to start investing with a little bit more confident. We'll start with the basic, all the way to some alternative way to start building wealth. Let's get started. So let's dive into the basic of investing. So what's the point behind investing? Well, the idea is to put your money to work so you can grow over time. Let's say for example, right, you had $1,000. You can either bury it in your backyard or leave it in your bank account. But there's the problem. There's this thing called inflation and it's not your friend. Okay, fine, inflation is not your friend, but what does inflation mean? So inflation means that the price of items, let's say groceries, gadget, are worth $1,000 today, but somewhere down the line, those same items are now worth $1,100. So if you just left your money sitting there, it's actually losing value over time because you cannot buy the same item in the future as you can today. And that's where investing comes in. It helps your money grow over time so you can keep up with inflation or even outpace it. And this is where you might be wondering, well, how does money grow over time? Well, the idea behind investing is really simple. When you invest, you put your money into something like stocks, bond, real estate, with the expectation that its value will grow over time. Take a house for example. Let's say you buy it for a certain price like $500,000. So what happened is over time, the value of that house starts to increase. Why? Because maybe the demand for houses start to increase, right? The higher the demand, the higher the price. Or even because of inflation. Again, the prices of an item 5 years ago is not worth the same as the prices of that same item 5 years later. And this is where inflation starts to work in your favor because now prices are increasing and the price of the house start to increase. And when you do finally sell it, guess what? You make a profit. But the thing is, not all investment or like real estate. When it comes to investing in stock, you're essentially buying a portion of the company with the assumption that that company will continue to grow and be more valuable in the future, which means your portion of the shares of the company will be worth more. And sometimes these companies will pay out dividend in terms of sharing their profit with shareholders. So when people talk about investment, they're usually referring to things like stocks, bonds, real estate, or even more riskier stuff like crypto. But we're not going to get into any of that stuff, guys. We're going to solely focus on stocks because they are more common and more accessible to most people. And the cool thing about stocks is that you don't need a massive budget to start, and the level of risk is completely different compared if you invest in more exotic investment like option trading. Let's talk about investing in a company's stock. When you invest in a company, you're actually buying a small piece of that company. For example, let's say you decide to buy Tesla stock. You essentially become a part owner of Tesla. And that's because Tesla is a publicly traded company, which means the public can actually trade the company's stock. Now, this is where things get tricky, right? In a simple world, you could just go to the company website, click a button, and there you go. You own the company's stock. But in reality, things aren't that simple. You need to go through a broker, which is a platform or a middleman that allow you to buy or sell company stocks. And once you're done setting up your broker account, you now have the ability to buy Tesla stocks or any other company that are publicly traded. So how do you actually make money from stocks? Well, there are two ways you can do that. The first way is when you buy the stock, you're actually hoping that the stock increase over time. So for example, let's say you buy stocks of Apple, right? And you're expecting the company to continue to perform well, its revenue continues to increase, the stock price will also increase in value. Which means when you finally decide to sell the stocks, you will end up making a profit. And the second way to earn money is through something called dividend. And some companies share a portion of the profit with shareholders by paying out dividend. Let's say you invested $1,000, right, and that company pay out dividend. You will effectively be receiving a small portion, let's say $10, as a share of the company's profit. And the cool thing about this is that, let's say you own multiple companies that pay out dividend, right? All these payments can start to build up, which effectively add up to your overall return. So investing in stocks allow you to grow your money in two ways, either by selling the stocks for more than you bought it for or collecting dividend along the way. So you're ready to start investing and you're thinking to yourself, great, I can buy stocks in all these different companies. But here's the big problem. Do you buy stocks in all these big companies like a Tesla or an Amazon? Or do you go for something in the trendy side like a GameStop? It can feel a little bit overwhelming. And here's a little secret. If you're just starting out, trying to pick individual stock is not the best idea. And unless you're like some professional financial analyst who analyze the market every day, trying to pick stock is like trying to find a needle in a haystack. And to be completely honest with you, even the best professional financial analyst who studies the market every day for their entire career cannot consistently get it right. And that's because stocks are very unpredictable and it's really hard to know when to sell and when to buy. So as a beginner investor, what are you supposed to do? Well, instead of stressing about which individual stock to pick, this is not financial advice by the way, I would consider investing in an index fund. And what is an index fund, you ask? Well, an index fund allows you to buy a small piece of multiple different companies all at once, rather than having to choose between one or two. For example, if you invest in an index that tracks the S&P 500, you're essentially investing in the biggest 500 companies in the US, which means you're not betting all your money in a single company's success because you have all your investments spread out throughout a range of companies, which can also lower down your risk. And a good way to look at it is like this. Let's say you had invested $1,000 in the S&P 500, right? Your $1,000 was spread out throughout the top big 500 companies in the US, which means you would have some money in company A, company B, C, D, and so on. And this approach is really good for beginners because it completely removes the guesswork out of investing. You're not trying to beat or outsmart the market, you're essentially just riding the overall market growth. And because historically the market has gone up, your investment has the potential to grow as well. So instead of worrying about picking the next big stock, consider keeping it simple by investing in an index fund. It's a straightforward way to invest and build your wealth over time instead of stressing out by trying to time the market. Now, let's look at some alternative way of building wealth and what some might call the quicker way. And so far, we've covered the more traditional way of investing, like buying stocks, indexes, and allowing your money to grow over time. But there's another way to think about investing that could potentially help you get to where you want to be a little bit more quicker. And when most people think about investing, they automatically think about things like stocks, bonds, and real estate. But let's take a moment to think about the real goal here, right? To make your money work for you, turning what you have now into more in the future. And stocks and bonds can do that, but they're not the only way to do it. And this is where alternative investment comes in. Instead of investing in someone else's business like Tesla or Google, consider investing in yourself and in your own business. For example, the S&P 500 has historically returned about 10% a year on average. So if you invest $1,000 today, you would effectively be making about $1,100 by the end of the year. But here's the thing, what if you could take that same $1,000 and do something even better with it? And this is where investing in yourself or your own business comes in. Let's say you had a passion or a skill, right? Or maybe you're really good at coding or you want to start an online boutique. By putting money into developing those skills or launching that business, you could potentially see a higher return than what you get in the stock market. The main takeaway here is that investing in your own abilities, skills, and businesses can be a more powerful way to build wealth. It's also about taking more control of your financial future by leveraging your talent and ideas. So whether it's building a business, acquiring a new skill, or starting a side hustle, considering this alternative approach can be a faster way to building wealth. After all, when you invest in yourself, the potential rewards are limitless, right? And that's it for today's video, guys. And remember, if you gain any value from this video, don't forget to like, subscribe, and push the notification bell for more personal finance and sustainable fashion tips. And I'll see you guys in our next video.